for the guys that were in this morning. What was the main feature of this morning's classrooms? Inflation expectations, wasn't it? We were talking about inflation expectations all morning because we'd looked at the top edge oil and we were talking about the oil. Why was I talking about inflation expectations all morning? Why was I doing that, guys? Why was I talking about inflation expectations all morning? Why? Because it just so happens to be today's subject, or is there another reason? Yeah, because CPI is coming up, right? CPI is coming up. The auction, absolutely, Reeve, the auction's coming up. So with CPI coming up, people are trading inflation for a change, right? So inflation is a driver, right, Andy? Inflation's today's main driver of the markets for the US Open. So if I know that inflation is going to be the main driver for today's US Open, I want to try and get an inflation read about what the market thinks this number is going to come out with, right? So I started to focus everybody's attention on this. I started to focus everybody's attention on this oil price, and I started to say, well, you know, on that basis, and I started to look at inflation expectations last night, not this morning. I started to look at inflation expectations last night, and I started to say to myself, you know what? I think we need to be careful with how the market's trading this. And you might be saying, what does that mean? Last night. Well, take a look at what I said at 12 o'clock midnight, 14 hours ago. Bonds and gold. The way the fly is behaving this evening, we're currently looking at long bonds bottom edge tests. Secondly, if that plays out, real yields are a little too hot. And that could help gold off the lows as well. This was at 12:14 last night, guys. So I'm looking ahead and I'm looking and saying, okay, we've got the biggest inflation number of the month coming up in the US session. I want to try and figure out what the trade's going to be. I want to try and figure out where I should be trying to work into my best narrative. Well, if I've already told you that we should be buying gold at the low price, we should be buying bonds at the low price, we told you should be buying equities at the low price, what's that telling you? So let's think about it. What was our 4 trades that we've called? It's quite an unusual pair of 4 trades, isn't it, when we think about it? What are the 4 trades that we've been calling all morning since last night? What 4 trades did we talk about? Well, number 1, we've just mentioned that gold was a long trade. Number 2, we've talked about the YM, the Dow Jones. We also mentioned that that was a long trade. What else did we say? Bonds. We talked about bonds as a long trade. What else did we say? Oil. What did we say oil was, however? Short. Now that's an interesting mix, isn't it? Long gold, long equities, long bonds, short oil. Why did we have that relationship? Because it was all based on inflation expectations. But it wasn't just based on a theory of inflation expectations. It was based on traded inflation expectations, wasn't it? It wasn't just some idea that perhaps there was going to be some inflation somewhere showing up or a lack of inflation somewhere showing up. So when we looked at that narrative and we start thinking to ourselves, okay, well, how did that play out in due course? How did it end up making did it end up making any money? Well, I think we can all agree that we've ended up getting a pretty sensational trade at the end of the day. We gave a live tweet, in fact, for a long equity trade a short while ago, and this is what happened on equities. We came off the 55 level that we tweeted previously. We've already given this level out hours ago, this level here, 55s, and we end up getting this sensational upside move. We have been talking at length about the bond trade this morning, and we've obviously talked about it, we've traded it, we've shown you it, we've discussed it, we've narrated it for you. And this is what happened to the bonds today. There's the bond trade. There's the long outcome. The 212 going up to 202 for over $1,500 per contract on that little trade as well. $1,500 bucks per contract on that little trade right there, guys. We talked about the narrative on gold being very, very troublesome. Very troublesome indeed in terms of the real interest rates, and from the bullet train level, what's happened? From the stops level, what's happened? You may well remember I actually had a discussion with you guys earlier on today about the discussion I had with an intern from a while ago, remember? And the discussion with the intern from a while ago, we've already got that trade setting up on gold, didn't we? So when you look at what happened to the gold market, this is what happened to gold in that little trade narrative just there. Now you may be thinking we're kind of laboring the point a little bit here. But when you think back about the narratives that we've been developing out and why we've been developing them out, and all of a sudden you think to yourself, wait a sec, I could have been that trader. I could have been the guy that took those trades. I could easily have seen some of those storylines. It's not about one of the stories, is it? It's not about one single storyline. It's about all the storylines that we've already mentioned in the tweets. It's about then saying, well, where is the deal? There's the oil trade right there. Sell side oil, top edge, boom. Sell side oil, bottom edge buy on gold, bottom edge buy on bonds, 55 buy on the Dow Jones, and look at the outcomes on those three trades. Look at the outcome on all three trades because of a read that we have on CPI numbers, where we're already starting to forecast a weakness in the CPI. And you're starting to think to yourself, well, we're not forecasting a weakness in the CPI. We're seeing it. It's being traded. It's not something that we're looking at saying it might be, it might not be. So we see the CPI numbers coming out and we can see exactly what we're thinking, right? We can already start to recognize some of these simple narratives. When we start putting this together, we start thinking to ourselves, wait a second, this isn't just some made up idea. This is something that's been well thought through over a period of hours. There's the conversation we had there about the gold and the bonds. We're talking about this at midnight last night. We're talking about this trade here. Could help gold off the lows as well as long bonds as well, right? Bottom edge testing, long bonds. So we're already starting to think that through before the CPI numbers come out. We're already going through that process about trying to find the right price at the right time at the right levels. So we're starting to watch these as it develops, and we're starting to see these elements coming out to play, isn't it? It's not just a once in a lifetime type trade, is it? It's not that type of storyline. It's a storyline that we can then look at over and over again and say, well, you know what? We've already mentioned it several times. We mentioned it when we talked about the tips markets this morning. So when we looked at the tips markets, we were specifically talking about the dollar, but the oil, but that's because we were mentioning it in relation to inflation at that stage, right? We were mentioning it in relation to inflation, and we said the tips markets are painting a bearish picture for oil. In other words, lower inflation numbers. Bearish picture for oil means a bearish picture for inflation. And that's what the outcome we got in today's inflation numbers right there. And it's all about just winding your way through these little tweets, isn't it? It's about winding your way through these tweets and threading the information together, isn't it? It's not about one tweet. It's not about a single one-off. There it is. That's the deal. There's the Dow Jones tweet right there. 55s, 10 o'clock this morning, 10:19 this morning. Big Dow activity reversing the 31355s. That was the buy trade off that level. When you look at what we're talking about, you can see that we're doing these actual trades. We're constantly doing these trades. And you can see it's not one single outcome, is it? Oil, we're back on the offer again. Look, 10:58 this morning, 10:58, we're back on the offer. We're offering into this. And when we're looking at these stories, we're starting to say, well, what the hell are we doing here? Why are we not in this? Why are we not doing any business? And you might be saying, yeah, but what about your bond? Well, for anybody that's been in the room this morning, they know exactly what I've been doing on the bonds. And I'm telling you before it happens. I'm not one of these guys that will just come in and say, yeah, long bonds after it's gone for $1,000. We told you before it happened, did we not? There's a tweet right there. Nice pop developing bid value on bonds, 12 p.m. today, 12 p.m. So this is the whole trade in here, isn't it? It's a whole trade. It's not one trade. It's a whole trade. And obviously, I could print off another dozen tweets, which which obviously kind of goes in line with exactly what we're talking about here. You can see at 1 o'clock we're still bid on the bonds at this stage, aren't we? And as I said, it's about threading through this narrative here. Bonds, we're still on the bid. Look, sitting quietly on bonds with the fly is now bullish into this, using it, moving into the US volumes. 1 o'clock, 30 minutes before today's CPI numbers. And then we're in position for these trades, aren't we? We're taking these trades. We showed you these trades. There was a trade just before 1 o'clock. Look. I mean, obviously, this is just the trade we took on trading, Ninja Trader. It's not our trade. It's just a trade we show you guys. But you can see we're working into these lower prices so that we can demonstrate what we're doing. This was sent out at 1:26, 4 minutes before the CPI numbers come out, 4 minutes before the CPI numbers actually showed up. We're already showing you that we're able to do this, tweet it, talk about it, trade it, put ourselves into position. And then when we get the breaker from this, you can see it's not just the breaker on the Dow Jones. It wasn't just the breaker on the bonds, because bonds and the Dow Jones went up at the same time. No shit, Sherlock, we were buying both of them. Does that not tell you something? Does that not tell you that in the only place in the whole retail space for trading that knows how this stuff works is us? Seriously. It's not an ego stroke session here, guys. It's a genuine plea to try and get people to actually really pay attention to this information. We've said it 1 billion times. We should have 1 million people in here. Thousands, over thousands of times a day we mention it. We're the only people on the planet that knows this stuff in the retail space, showing you guys how it plays out, showing you why it plays out, trying to get you into plays before they take place, making thousands of dollars a day from these calls. 100% 2 days ago on the cats. 300% nearly 1 day ago on the cats. 10 grand turns into 60 grand. Top tick price on both cats based on our basic structure, which we'll show you again in classroom. No surprises that we can top tick these trades as well. So when you see it, it's not about one piece of information, is it? It's not about a single thing, because most of our conversation today was about inflation. And you can obviously start to now understand why we were showing this chart quite so much this morning. We've got to let you come across with some conclusions here, guys. You've got to start I can't keep showing you lines and getting you to draw your attention to it. You should be already on top of this stuff. This is the point of this classroom. You've got to be typing in that box what you're looking for, why you're looking for it. Not after the thing takes place, but before it takes place. You've got to be willing to stand up the way I do every day in this classroom and say, I'm going to be buying bonds at the bottom edge. I'm going to be selling oil at the top edge. I'm going to be buying equities at the bottom edge before it even happens. You've got to be doing the same thing. I'm looking at bottom edge bonds. Get in there. Tell us then. I'm going to be buying that bottom edge equity that Ray was talking about. I'm really interested in it and I want to see it. I'm seeing some volume coming in. I'm seeing some bids coming in. Get into it then. This has been a huge, huge day for us. And the US session hasn't even started, which is unbelievable. Crazy good. Damn tootin' right it's crazy good, guys.